Dharamshi is with us, Chief Investment Officer at ValueQuest Investment Advisors. Ravi, good to have you with us here. Good morning. Thanks very much. So let's just start with your own take on let's work backwards. I was thinking, I'm going to ask you with your take on tariffs and how this gets resolved. I was saying maybe, if Trump reciprocates and says, okay, you cut tariffs and this is what we're going to do. Because right now people don't know how this negotiation is supposed to happen because the tariffs imposed are just so crazy and arbitrary. There is no roadmap. So you need an off-ramp, which we don't have. So that may come sooner rather than later. But then we'll get to that in just a bit. Markets first, Ravi. We have broken the March lows, 22,000 and 30, 40. Do you have a take?
No, thanks for that question, Prashant. And I just heard you and Nigel and Survi talking about it. I think you guys do a pretty good job at analyzing. I don't know why you need experts like us who anyway don't know anything. No, I'm not joking. I'm serious. It's very difficult to figure out what's going to happen over the next 1 month or next 3 months also. Only thing we can focus is on the long term, honestly. And, we were in the middle of a homegrown correction, which we were doing just fine. And now suddenly this homegrown correction has turned into a global carnage. So obviously new level of uncertainty just got added. Good part is I do believe that this is the beginning of the end and not the beginning itself in terms of the correction. I think what we should understand is that yes, this risk was there, but we were all grappling with how much the Trump administration will follow through on its threats, what they will do, how much tariffs. So the thing is, it's a risk that has panned out. And now we can quantify it. How much is the risk? Can we model it? The variables will still change. The other uncertain variable about this event is how the various nations react to it. And honestly, every other nation might react the way they do, but it is only the China's reaction that matters largely to us, as in largely to the world. Because finally, this is about trying to shift manufacturing back to US, and the biggest beneficiary of this shift of manufacturing out of US has been China or the other conduit nations of China in and around Southeast Asia, Asian nations. So from that perspective, if that is what the end objective is, I think India has not taken away too much of manufacturing, actually holds us in good stead. We haven't only, from that perspective, we don't have much to lose. And we still don't know how the entire jigsaw puzzle falls into place. But I do believe because we don't have much to lose and because we are on the right side of at least being friends with US, there is a possibility that we might actually land on our feet when all this ends.
Yeah, let's really hope so, Ravi. Absolutely. We know that relatively, in an economic or trade sense, we're not that badly impacted, we as in India. I think it's this whole interconnectedness of financial markets that's the issue at hand. I want to focus on one sector in which you've done so much of work, Ravi, and that's pharma and the aggregated chemicals, the related chemical space. And here, I think investors are very confused. First of all, we don't know if he's putting tariffs, if yes, what kinds. We have no clue. But people who have investments in the pharma space right now, what should they be doing? And those who want to make fresh investments, use a day like today as a buying opportunity, should they look at US generics companies or not? Should they look at CDMO? Should they look at API companies? Because it's very confusing in an interconnected world.
Now, first, from the point of view of market, I have no doubt that uncertain times bring good prices, and I think good prices are here. Can they get even better? Nobody can rule it out. But at the same time, if you go back in time, you guys were discussing the COVID times, it was not that easy. When it is happening, it is not that easy. I would disagree with Nigel over there. In hindsight, it looks that it was easy to understand. But at that point of time, we all were grappling with how this world will look like 3 years down the line. We had absolutely no idea. Similarly, we get the same feeling right now that we don't know how this new world, new economic order will look like, what the trading partners will be. But everything will eventually settle down. See, President Trump is in a hurry to accomplish a lot of things in 4 years. Who knows whether he will get another term or no. So from that perspective, what should be done in a gradual manner, he's doing it just in a overnight haphazard manner. and he is willing to risk a recession in US for the same. But coming back to the odds, I think from the perspective of buying from a 3 to 5 years perspective, I think the odds just shot up north of 90%. If you are buying at this point of time over a 3-year, 5-year time frame, you will for sure make money. And I have no idea what kind of a bilateral agreement will be signed or what Fed will do or what RBI will do. But eventually, right action will be taken. And that was exactly the playbook even during the COVID times. We had no idea how the world will evolve, but the people in the powers will take the right action, and that will lead to recovery in the global economy was the point. Coming to the pharma point that you made, I think it is very difficult. In fact, I feel almost next to impossible, at least from the next decade point of view, to shift the pharma supply chain to US. So if that is the case, then all the impact of the tariff hike is going to make the drugs even more expensive in US. Now, India and China are actually the source of making the drugs cheaper in the United States, the generics out of India. Now, I don't see a logical reason why they should be increased. Of course, you can incentivize them to put their plants in US, but you cannot disincentivize or take the supply chain, uproot the supply chain out from China and India into US. So I believe it will be the least impacted sector for sure, and probably it might eventually help out also because the realization will dawn at some point of time that you cannot shift supply chain so abruptly just like that. It might be so that the bulk chemicals or some of the particular sectors might eventually over a 5-7 year time frame do move out, but not the really technologically savvy ones, because you do not have that kind of a labor base, you do not have that kind of an ecosystem at all. So creating that kind of ecosystem is going to take time. From the opportunity perspective, I believe, yes, the supply chain shifting away from China and towards India in the CDMO is something that we should be looking forward to, regardless of whether Biosecure Act comes or does not come. So it remains an area of interest for us, and we will be keen to look at opportunities. That is one area. Second area that we do like is anybody who's integrating themselves into the GLP-1 supply chain, the anti-obesity drugs. Those are two areas where we believe that come what may, if the prices are in our favor, we should be looking to buy.
Okay, so that's on CDMO. That's one part of it, Ravi. You're saying that this is not going to happen overnight, but over the course of the next several years, maybe Indian CDMO players can benefit from a shift away from China. That's point number one. But the more important pressing issue here is US generics. Investors who either have investments already in a Sun Pharma or in a Cipla, Lupin, companies that have a reasonable US exposure, they're all worried. So what would you say to them? Sell your holdings for now if you're sitting on profits, stay invested. What should investors be doing with this large US exposure?
No, so the point of worry in the US facing generic companies is not the fact that there will be tariffs. What is worrying is the fact that their earnings are dependent on one or two drugs. The oral solids has been, sucked dry in terms of opportunity. Revlimid has been a big portion of the earnings for a lot of these companies, and there is not enough pipeline to replace that in the US generic market. That is more of a worry and a real worry for the earnings. Right now, these supply chain related issues are more sentimental, and I would not be too worried on that front. So what I believe is that Indian pharma sector is also now going from being a very homogeneous sector to a much more heterogeneous sector. Everybody is starting to focus on different markets, different product segments, generic being part of the innovator supply chain. So business models are evolving and becoming different and different. So one driver is not necessarily going to be impacting the entire pharma industry in India.
Hi, Ravi. Good morning. Just to correct myself, I didn't mean that it looked very easy during COVID. If hindsight was foresight, we'd all be millionaires. But that wasn't the case. I was just putting a point in terms of feedback we received during that point of time. At that point of time, you pick up the phone, you speak to a couple of large mutual fund managers or HNIs, and that was the broad feedback. Either you go all in, and in fact, you make a lot of money, or maybe you miss out on this opportunity. That said, Ravi, I wanted to ask you about a couple of sectors. What about tech? tech is something that's absolutely got slammed. There's a lot of uncertainty on the global front as well. But these are very well-run companies with good balance sheets as well. At some point of time, would you think that chipping into this sector would be good?
So one thing that bothers me and that has really, I wonder when that will change, is that the sector has not invested in R&D at all. They have been focusing, their business model has been dependent on labor cost arbitrage. And that is where the problem lies. If it is going to be just labor cost arbitrage, sooner or later that will run its course. And we will have to find new avenues. And I think maybe this crisis turns out to be a blessing in disguise. Because eventually, I think, only when you are put in a corner that you start acting and you start behaving like I need to find an opportunity that will last me the next 10, 20 years. And I think Indian IT, at least the large Indian IT companies, have been sorely lacking on that front till now.
Got that. Ravi, slightly more philosophical question. Since maybe indulging in some philosophy is good. Trump during the first term was so focused on the stock markets, right? He'd be proud and happy if the Dow was going higher. This time around, he's been just oblivious. And just last night, a Sunday night, when asked about the stock market, he's okay. He says, well, we need to, the patient needs some medicine, we need to fix it, etc., etc. That runs contrary to he's been very focused on how a president should be evaluated, how high the Dow is, or how good the stock market is, right? And he's a businessman himself. And then you've got this in his second term. Can it really be so different? Or it's just a matter of time? I mean, it's, as they call it, where is the Trump put? Maybe the put is much lower, but there is a put. And it goes to the heart of the question, will they recognize the pain coming through stock markets and what's happening in the stock market as an indication of what is happening in the rest of the economy? Just a quick take, Ravi.
So philosophy and humor is what will see us through in these tough times. So we have to focus on that. Can't move away from that. But I think coming back to all these politician talks are just means to an end. So one should not be focusing too much on that. And in fact, I would take him literally now. I was used to taking him, not taking him too literally, but I think I would take him literally. If he says Wall Street doesn't matter, then Wall Street doesn't matter. So from that perspective, I think, and it's not only echoed only by President Trump, but others around him, the key part of the core committee, everybody has been echoing the same sentiment that it is finally Main Street that matters and not Wall Street, and Wall Street will follow the Main Street. And their focus is going to be squarely on the Main Street. So, it looks pretty obvious to me that markets is not their priority at this moment, and we will have to bear some pain. And like he says it himself, that this is an operation being conducted. So the patient will take time to recover. But the only question over here is how the other nations respond, right? It is not a one-way street.
Absolutely, absolutely. Operation, patient, medicine. The analogy is all pharma related these days with Trump, right? That's how it is. But I take your point as well that Wall Street is maybe not important. But the thing is, even Main Street is now beginning to protest. There's a legal case that, one particular association has filed. So let's see how this goes. A very, very, interesting and very volatile times. Ravi, thank you so much for joining in.
And the other thing, right? Philosophy and humor.
That is the only thing that will see us through.
That's the best. And if you can merge both, I think that's the best way to do this.
Best case. Thank you. Thank you so much, Ravi, for joining in. We look forward to more advice from you in the coming days.